UK economic growth is flatlining and could even go into reverse. What does that mean if you're a UK property investor or developer? Do you have to do anything differently? Does it pose any extra risks in carrying out property investing, developing when growth can be going downwards? To discuss all that, I'm joined as always by John Howard. You and I have been through a few down patches.
We've been through a few down patches, Ranjan, in our time, haven't we? And a few recessions. Very interesting, isn't it?
But what do people, I mean, there are a lot of new investors out there. They may not have invested in a period of nil growth or negative growth.
No, but I think there's a difference between nil growth in the overall economy and in the property market as such. Because the property market, even last year, which had a general election in it, and normally when there's a general election, everything's on hold for that year, not the whole year, but some of the year. But even last year, we had modest growth of 3% in the property market on average. Now that's an average, it's a micro market. Some areas might have gone up 7 or 8. In fact, do you know, Ranjan, the best performing area or town city last year in terms of growth, and what was it?
No.
Stoke was way up there.
Newington?
No, not Newington. Somewhere up north, Staffordshire. You won't have heard of it, but basically, the year before it was one of the worst performing, and bizarrely, this year it was the year before last worst performing. This year, one of the best, 14% growth. In fact, Hounslow, that's near the airport, isn't it? Hounslow, yeah. That had an 11% growth, surprisingly. Nowhere else in London did, but that did. I don't know why that would be. So it's a micro market. So what I would say is I'm not convinced, and I think I might be talking for you, and I'm sure you won't let me do that, that's for sure. But I'm not so concerned about the economic growth. I don't think it's going to stagnate the property market. I think it is connected loosely, but it's not as strongly connected or stuck together as perhaps you think.
Well, I'm not sure whether I think that. Let me tell you what I think. I think, first of all, we've had the national price growth last year. Well, it was a couple of percent, as you say.
Not worth worrying about.
But when you adjust for inflation...
Seasonal adjustments, as they say.
When you adjust for inflation, it's actually fallen.
Yes.
In real terms.
Yeah.
Which is a bit worrying.
Yes.
But I think the property market is linked to the general economy. If the general economy is doing fantastically, then it'll add as a boost to the property market.
It will do.
And vice versa. I think the thing that we have to be careful of here is the economic growth generally means whether there's job growth or not. And I think the property market needs job growth. It needs increasing wages. It needs people getting promoted. It needs people moving around because of new jobs and stuff.
Yes.
And I mean, anecdotally, I don't have any evidence for this beyond our own portfolio and our own lettings activity. But in North London, for example, there's been a lot of contraction in the housing supply because a lot of landlords are selling.
Yeah.
If you speak to estate agents, they'll tell you 18% of all their stock are landlords selling up.
Yeah.
But it doesn't mean there are 20 people queuing up for every property to let.
No.
And that's because the job market has significantly cooled in London.
Yes.
So even though the number of properties to let has come down, it doesn't mean that there are tons of people chasing stuff.
I think you have to...
So there's a link there with the growth.
There is a link there. This year, our estate agencies that we own, we're saying that we think we're going to see, and it's bailed out by the start of the year, we're going to see a modest-ish increase from last year, which was a modest increase from the year before. So things have improved. And I agree with you that, of course, jobs are very important in terms of people getting promotion and moving. And the concern is if that isn't happening, then people aren't going to take the risk. Most people are very risk averse. They're not going to take the plunge from going from a 3-bedroom semi to a 3-bedroom detached. Or if one of the couple, whoever they are, one person is normally more bullish than the other one, and the one that's not bullish is negative, can have a good argument for not not buying a bigger house because of the economy and so on. But the one thing you haven't mentioned, which I think is very important, is the massive housing shortage in the UK. Since 2010, we have had 10 million people come to this country, and we've only built 5,000 houses or 5,000 properties. So that tells its own story. Massive, massive undersupply of rented accommodation. Now, interestingly, bailing out what you said, which I don't like to do very often, the latest stats on the rental market is that the rental market has only grown in the last few months 3-point-something%. And actually, there's a lot more vacancies now, than there was a year ago. So in other words, it takes longer to rent a property and all this. So that bails out what you're saying. But I don't think it's a case of there's no growth, so the property market's going to be terrible. I don't think that's the case at all.
Okay, so we're about to, in a few weeks' time, we're going to be filming Series 8 of Property Elevator.
We are. Looking forward to it.
It should be good fun. And people will be pitching to us their property deals. And a lot of people have an exit plan. You know, they found a site, they're looking to build 4 or 5 flats or houses or whatever, and the exit plan is to sell on. Now, being as growth is flatlining, compared to previous seasons, how are you going to advise those people in terms of the risk that they're taking on? I mean, how long is it going to take to sell properties? Should they take into account any risks associated with the flatlining growth?
Well, everything we look at, you and I, we de-risk before we buy as much as we can, and that includes, research on the area. I would say if it's in a decent area, then you're always going to sell it. I would say the question mark is whether or not you're going to sell it for what you want, or you're going to have to take slightly less. So the margins in all these deals have to be really good. And the one thing that we find with Property Elevator, and also when I'm advising other people about purchasing property and all the rest of it, is that the margins are not big enough. You need big margins, because then if something goes wrong on the construction, it costs more, you can get out of jail. If the property prices aren't, if the sale price isn't as good as what you thought it was going to be, you can get out of jail. You're not going to hit gold every time you develop a property. You have to be realistic. Sometimes it will be bronze, sometimes it will be silver, and now and again it will be gold. That's the truth.
I agree with you. And we're in season 8 now.
Yeah,
and in
amazing.
some of the earlier seasons, in better economic times, deals were funded where there was just 22, 23% margin.
Yeah, well, I think we were all feeling a bit ballsier.
But what's your hurdle rate figure for this series? What will you be looking for in terms of margin?
Well, depends how long it takes.
Or are you keeping that card close to your chest?
Listen, you're no competition to me on the show now, John. I don't need it, but you won't go outside the M25.
Oh, I will. I've got a bus pass. Go on.
You should have.
What's your hurdle
rate? So I would, well, it depends. It's all about time. How long is it going to take you to do? If it's only going to take you a year to do, you can, I'd work on 25% net return on cost. If it's going to take a year, it's going to take you 2 years. Technically, that should be 50. It's never going to be 50, but it might be 35 to 40. So I think that's how you need to. We look for decent margins. We have to.
We have to. And the other thing is, I don't know whether you share this view, but when the economy is flatlining in times like this, I get a little bit more dicey about longer term projects. You want to be in and out in under a year.
I agree, if you can.
Can't predict too far.
That does depend on the area though, doesn't it, Ranjan? Because the best areas will always sell. It might sell a bit less, but they'll always sell. It's the poorer areas which are more vulnerable, always more vulnerable to a drop in growth, because they're probably cheaper jobs. They're the jobs that probably go first for a lot of people, and so on and so on and so on. But I'm relatively optimistic, and we're buying 4 or 5 developments at the moment. So, and I wouldn't be doing that if I wasn't relatively optimistic about not so much the growth, but about the UK property market as a whole. I think it's okay. I think it's okay. Build costs are a load of money. Interest rates are coming down a bit. Now, if you're a developer, as we've mentioned before, that hardly makes any difference these days, because if you've got a development bridge or whatever they call them, you're going to be paying, 1% a month or something bonkers. Whether the interest rate, the base rate comes down or not, that doesn't seem to affect that. But certainly as investment stock, and if you're refinancing a large portfolio or whatever, it will help. Yes. Certainly.
Okay, John, I get what you're saying. Of course, some areas are very resilient to downturns and all the rest of it. But very rarely do we have a flatlining economy or a recession in the economy and a booming house market at the same time. Normally, the booming house market goes with a booming economy.
Yeah, very much so.
So, in a flatlining economy, properties should, in theory, take longer to sell.
Yes, they will.
If the exit plan is to sell, and on a development, you're only making money when you sell the last few.
Sure.
How are you factoring all of that in when you're looking at exit by selling?
Well, first of all, no one's saying that you're going to have a booming property market if the growth is zero or worse. No one is saying that, Ranjan. You're putting words into my mouth.
No, I'm not. I'm just asking you some interesting questions.
And you're challenging me this afternoon.
Oh, I will challenge you.
With regards to the area you're investing in is very, very important. Are people downsizing? So are they wealthy people that are selling a house for 900,000 and buying a nice flat for 350,000, for instance? So where you're buying is so important with this. Because, the first question, one of the first questions you should always ask yourself on any development is, who is going to buy these? Are they first-time buyers? Good luck with that at the moment. Are they second-time buyers, third-time buyers? They're difficult because they rely on the first-time buyer. Most people rely on the first-time buyer, to be honest with you, up the chain, don't they? So, and we know that the buy-to-let investment stuff is probably not around, really. So you are depending on other people to sell their property in order to buy yours. And that is an issue, and I would agree with that. But what I do find is we do a lot of stuff a lot of property where the people are downsizing from a bigger property into still a nice area, still a nice property. It might be a conversion of a listed building, for instance, so they feel they've got the illusions of grandeur and the high ceiling still, but they've only got 800 square feet compared to 1,800 square feet. So they're cashing in. Those people can be more flexible when they sell. The reason they're being more flexible, most of them are cash buyers. So with our estate agency in Norfolk, 70% of our buyers are cash buyers. Can you believe that?
Wow.
Amazing. And when I say cash buyers, they're selling an expensive house with no mortgage on it, or they've got unbelievably cash in the bank. So, not everybody is stuck for money. Not everybody is struggling. There's a lot of people in this country with a lot of money, and it's tapping into that market probably, rather than the bog standard market that you need to be doing in this type of market. And also, don't forget, thank God for divorce. Thank God for divorce. I always start when I speak, I'd always like to see how many people are divorced and thank them. Because if it wasn't for them getting divorced, you wouldn't have half as many estate agents, solicitors, contractors, developers, because people have two houses, fall in love, sell two, buy one, fall out of love, sell one, buy two, and some people do it 2 or 3 times. So it keeps the market going. 50% of people in this country divorced. Thank goodness for that. That won't change.
Well, you're coming up to Valentine's Day. What a lovely thought, John. No, I do agree with you. I mean, I've got a student of mine who did a PD scheme of a office to resi, and he made 4 flats out of it. And it's in a village not that far from here. And it's one of those places where it's all houses, family houses, and there aren't any flats going up in that area at all. So his 4 flats are the only brand new flats that were on sale. And from talking to a whole bunch of estate agents, they said, look, you'll get divorcees pick it up. Because they need a smaller place, they want to be close to family and school, whatever, and they're all in the area and all of that. And all 4 flats sold to divorcees. Yeah,
that's it.
It was exactly the market.
They're now all going out with each other. By the way, they're all going out with each other. And the next thing is they'll be selling them to buy a 5-bedroom house. So yeah, there we go. So excuse me, you're absolutely right. But where you buy is so important. And if I look at the areas that I've agreed to buy or buying at the moment, I've bought in some of the best roads in those places. And it's no coincidence, I promise you.
Yes.
Because I'm meant to know what I'm doing, Ranjan. It's no coincidence. They're in quality areas, and they're almost, in some cases, the best road in those areas.
Again, I agree with you. I mean, I'm going through a little bit of a period of pruning the bush, as it were, because there's some properties that don't make sense in my portfolio today.
We did that a few years ago. Yeah.
So it's mainly flats in other people's blocks and odds and sods. I want all units in one block, that kind of thing. These were bought in the early stages of my career when I was working and all of that. But all of those properties.
So hang on a sec. When you were working
Oh,
and
yeah,
all that, well, that assumes you don't work anymore.
I mean, working in a salaried job for someone else.
Oh, I see. Okay.
I mean,
yeah.
but so these were all properties, but I always bought in good areas and good streets. Yeah. And even though they've been rented, some of them have been rented for 25 years or so. Yeah. They've all found buyers within a few weeks.
Yeah, that's why.
Because there's a certain liquidity in quality.
There is, absolutely. I agree with you. So in terms of what are we saying then? You think growth has got more impact on property than I do. I think I'm not saying you haven't got to be choosy. You have got to be choosy. And during with the property elevator, we are going to be choosy. It'll be very interesting to see everyone, because there's 6 experts who specialise in all different things, let's be honest. We all specialise slightly differently. And it'll be very interesting to see if we're all a little bit more cautious than normal, or whether one or two specialise in the areas that they're not worried about the market. It'll be very interesting.
And I think it will be a time for niches.
I think it'll be time for niches. And finally, it's the time for you to pay for dinner one night for everyone on the elevator. Well, we're looking forward to that.
I will be bringing my cheese sandwiches.
I thought, well, you normally do that at lunchtime.
And ginger beer and all of that.
Absolutely.
Now, here's the thing, John. Let's see whether you agree with me on this one. I think that when the economy is booming, property is booming, and it's quite easy to get a good deal. Because even if you make the odd mistake or two, you ride the wave of a booming economy and market. And a lot of people in a booming time make a few mistakes, but because of the rising market, they came out okay. This is the time when knowledge and skill take center stage, because you don't have that cushion of a booming economy and market.
No, and what I would say, or you're absolutely right actually there, and the other thing I would say is that if people are struggling in different businesses because there's no growth and so on, and they need to sell property cheap, and we can pick it up. And there's always a saying about having blood. We all talked about having blood on the street. But when things are tough, there are more opportunities for me in a tough market than there are when everybody can buy anything and sell it at a profit. And even if they've made a mistake, and we all make mistakes, paper over the cracks. Any problems, any mistakes you make in this market, you're found out.
Yes.
And that is good for the rest of us, and it puts a lot of people off. And we don't want too much competition. We hate competition. We'd rather have no one want to buy it apart from us.
And I'll leave you with a quote from Warren Buffett.
Please do.
When the tide goes out, you quickly see who's been swimming in the nude.
Very good.
And on that note, see you guys next time.
See you soon.